All right, back with another podcast, and you're listening to the Profit Strategy Podcast with Tom and Chris. Chris, how you doing?
I'm doing great, Tom. How you doing today?
Good. We had to do this a little early today. Let's get through the particulars. First, the Steelers finally had a loss.
Yes.
It was terrible. All good things come to an end. Not every trader is 100% accurate, and the undefeated season is gone.
I cried in my Iron City Light for a few minutes, and then we get over it, right?
Exactly. Just like trading, nothing is 100%. And, the market just doesn't go straight up. And we're going to talk about that. We're a little early this week, guys. Both Chris and I got stuff going on Friday. So we recorded this a day early, and happy to get it out to you a bit sooner. We're going to talk about what's going on with the markets right now. I did a video earlier this week where I discussed that is it time to sell Amazon as part of FANG. I was actually talking about the FANG group as a whole. And, we got that out Monday night, and looks like timing could have been pretty good on that. Chris, you'll do a little market overview too.
Sure.
And
go ahead, Tom.
And I want to end on the top 3 ways to find money to trade with in 2021. That's for those of you that hit us up every once in a while. I don't have your kind of bankroll. I have something smaller. What should I do? So we'll do that. Sounds like the dog is in agreement.
You know what? We're in a pandemic world, Tom, and the dogs being part of your workspace are now a common thing, right?
Exactly.
Sorry about that. Thank God it's not an interview or something like that.
I'll make some cat noises. We'll get the dog involved. Anyway, guys, looking at the stock market, we've seen things have just been going higher and higher. I mean, pandemic was gone higher. The stock market's gone higher. Unrest has gone higher. The stock market's gone higher. Unemployment rates, or the number of jobs available went lower. That means we're going to see more unemployment. But the stock market's gone higher. But sometime middle of this week, I think that a lot of this finally caught up with itself a little bit. We're starting to see some rollover. And Chris, I'm seeing the rollover happening more in FANG than anything else. And quick reminder to the folks that are watching the podcast, if you get my YouTube channel, then we discussed, is it time to sell FANG? Because FANG was looking pretty weak. And not just FANG itself, but really more of the stocks that didn't participate in the move up. So let me explain it to you, everyone. We were looking at the new highs just not too long ago. If you take a look at the S&P 500, SPY is the ETF that I commonly go to. We opened at new highs today. We came off those highs. We're off a good. We were off nearly 5 points off those highs, which is a 50-point drop in the S&P. I know.
They're getting upset. They're getting upset over this market, Tom.
Your dogs. I mean, we are going to do a discussion about dogs in the Dow. I know he's excited about that. We'll be doing that soon. So, put a bone in his mouth. And but I mean, new highs in the overall markets. S&P. If you take a look at the DIA, that's the Dow Jones Industrial. It opened at new highs this morning too. And so you got a lot of things happening. And you look at these new highs that are happening. What's going on with FANG? Well, in order to see that first, take a look at the Nasdaq or the Qs. They did not make new highs middle of the week. In fact, they're falling off really hard. In fact, Wednesday we saw drops near 2.5%. So it seems to me, and we discussed this earlier in the week, that technology needs a break, and it's getting one. It's breaking now. So go inside the Qs, take a look at stocks like Facebook. Facebook hasn't seen a high since the end of August, and it's off its high, and it's really kind of been in this triangle pattern, and we get below 270, really about 265. We're still, a good distance from that, but if we get below 265, we broke out of the triangle, and it's bearish. Apple. Okay, so Apple, I really thought was the value play in FANG. And it was, and I think it still is. It did. It hasn't seen highs since Labor Day weekend. 137.98 was the all time highs on Apple. It's back in around lows 120. But we discussed two such stocks that really look like they want to move lower. Amazon was one. I mean, Amazon back in September, $3,552 a share. I mean, we've been coming down to around the 2,900 area couple times, 3,000, and I think 3,000 is an area of support. But we get down there and take 3,000 out, and we could see the Christmas packages, though they will be record highs for Amazon. That's a sell the news event right there. Netflix, NFLX, another one. Netflix saw highs back in July. It has not seen a new high since July. It came awful close back right before their earnings were announced in October, but it too is below the $500 mark, a good 75 points off that high. And I think the problem with Netflix is when you look to the south and the west, you've got Disney, and more importantly, Disney Plus. And Chris, the only stock in FANG, and I'm not counting Tesla on this, but the only stock in FANG that had been hitting new highs lately is Google.
Google, yeah,
came off of new highs. Your thoughts?
You know what? First of all, Google has been the quiet performer here. Obviously, advertising revenue comes through on that. I think it's interesting, and let me expand on what you're saying about the Nasdaq 100, because that is the go-to when you're looking at FANG. That's the go-to index that you want to really measure things from, and where those stocks. And I just did this morning. Where those stocks lie in right now, Amazon is number 88 in terms of performance since October 1st. 88. So out of those 100, there are 102 right now in the Nasdaq 100. But out of those companies, Amazon is number 88. Alphabet, number 22. Apple, 61. I mean, the FANG stocks have been defanged, if you will.
Yeah,
and I think this goes back to that old idea or that adage of crowded trades, in my opinion. When you look at these stocks, as you mentioned, unemployment going up, market went up. Pandemic going up, market went up. What was the core of the market going up? It was large cap tech. Remember that? Just a couple months ago, everybody was so bullish on large cap tech.
Yeah.
These stocks have been carrying the market on their shoulders for more than 8 months, and they're just tired. And the thing that worries me more is they're crowded. Everybody owns them. Everybody owns them. So there's more selling pressure that is now pent up in these companies. And when you have something like these rollovers that we're seeing in Amazon and the sell the news that you'll see there, and Apple also getting over this product cycle, everybody was looking forward to that. And Tesla, bringing it back to Tesla, I worry about their inclusion in the S&P 500 on December 21st. We saw the stock split just a couple months ago indicate a top in the stock. Everybody was whipped up in a frenzy about it. I think the same thing happens here when we get it into the S&P 500. These stocks should be looked at as a little bit cautious. Ask me a question, Tom, if I give you the question.
Yeah.
Ask me what the top performers in the Nasdaq 100 are for the last month and a half or so.
Well, what are they? I think I kind of know, but let's do it.
Align Technologies, number one. Align. They straighten your teeth. They're up 61%. Micron Technologies, 49%. Lam Research, 46%. Applied Materials, 45%. Tesla finally comes in at a number 5. So you have to go down through 5 of these companies before you get to one of the big hitters. It's small, large cap tech that is right now driving the cube. And because those top 4 or 5 companies make up 38, 40% of the cubes, that means you got a flat line in the NASDAQ 100.
Indeed. Yep. And so, to me, it almost looks like that there's one more quiver in the arrow that the government has, and that is the announcement of a stimulus package.
Oh, yeah.
And I mean, I think it's a lose-lose scenario. If and you were saying it, I'll talk about the do and you talk about the don't. So if they do release a stimulus package in the next few days, I think the market will have a short term pop on that, and then we will see it drop after there is nothing left as the holiday break happens. Now, you were mentioning before we got on here that you felt like these guys were just going to stall it and they were just going to head on home.
I think they're trying to slip out the door without doing their homework. Yeah, I do. I
And
think that they're battling this, or they're volleying this back and forth and saying whether they want, what level they want to help the states at, what level it should be at the federal level. You know what? Just get it done, for goodness sake.
and what do you think is likely to happen if they do go home and forget about the American public that needs them the most?
Well, let's face it. Over the next, what do we have? 15 days until Christmas hits, and obviously you've got a number of other holidays that are around this season as well. A lot of people watch the headlines and think about how much they're going to spend over the holidays, even though we're running towards a close to the end here. A lot of people think about what they're going to be doing next year. They're making their budgets. They're doing all of this. If the government doesn't give them that indication that, you know what, Uncle Sam is going to slip you a check in your stocking this year, I think that you're going to see people pull back discretionary. The travel industry is right now getting a little bit of a jump start to get ahead of the pandemic recovery. I think you'll see that start to pull back. A lot of these inflated areas. Look at retail, Tom. The XRT continues to poke its way up to highs, but the correlation in the sector is going down. And for those of you that aren't math nerds like Tom and myself, that just means that you've got a herding cat situation. You've got stocks going all over the place. Some are going up, some are going down. And I think you're going to find the correlation going up, and a lot of those are going to be companies like Nordstrom that has been outperforming, starts to head lower. So I think it'll be a little bit of a ruckus as we head into the year end and kind of shake up some cages here with the market. And there are a lot of profits out there to be closed out and booked. I think you're going to find people happy to take their profits before December 31st.
I've actually been doing a lot of that myself. My two best, we're in a down day today. Obviously, as we're passing the middle of the week, and the two best positions I still have on in my portfolio are really boring: Pfizer and AT&T.
Whew.
Those are the best performers on a down day for me. They haven't done much, but I mean, they're very close to my target returns. When I scan up and down the area, I've got a couple of other ones that we've discussed that are a little bit longer term out. But I mean, look at Pfizer. It was not long after that the announcement. They were the first that came out that said 95% efficacy, and they had a little bit of a pullback on that day. It was a pop and drop, and then I got involved in that one. But AT&T just seemed, it just seemed like such a value at the time, and at the time when Apple had already announced and started shipping the iPhone 12, and we're still waiting for that Max at the time. And I thought, you know what, AT&T looks like a very interesting one, and so I did a little bit on the long side on AT&T. But yeah, I mean, I look at tech, and tech is performing pretty much what we expected it to be. I will mention one more thing. I got to give you kudos. My Etsy trade, well, that one targeted. I've actually got to look and try to roll that, and I'm kind of waiting till we get to the end of the week and maybe roll into another option strategy with Etsy. But it literally it was just, I mean, pennies shy from my target. So kudos to you.
Thank you. Yeah, a lot of these, these pandemic stocks, retail stocks, Chewy came out with earnings last night. Beat top bottom, and everything looks good now. They're selling off.
My wife has her own portfolio, and it's amazing. Her stock portfolio is actually outperforming mine. Go figure. And she said, I only buy what I use. She said she bought Wayfair because she uses Wayfair. She bought Chewy's because she uses Chewy's. Got a few of them. I gave her a couple of them that that she took advantage of, and they worked out. I don't think she has a single. She said, we were talking about just earlier this week. She said, I don't have a single loser in my portfolio, and I said, and that is why I want to start looking at selling. No disrespect to her, but the thing is that she doesn't. She's looking, and let me make this clear to everybody listening to the podcast. My wife and I have completely different trading styles. She is a buy it and hold it forever kind of gal. All right, when she sees something. Although she's a little nervous about Chewy's because she's looked at their fundamentals and she goes, "How are these guys ever going to turn a long-term profit?" But that's something she's looking at. But she really is a buy it, a set it and forget it type of person,
Mm-hmm.
and I am combination of both. I have some long-term stuff that I hold, but not much in the stock market. Most of the stuff I'm in is option oriented, which means I'm trading it. I'm not owning it. And so when it comes to trading, Chris, let's talk about the final thing we want to cover here as we get close to the end of our podcast for the week. And that is, got a lot of people asking, hey, I don't have a lot of money to trade with, or I'm just getting started. How do I come up with an acceptable amount of money to trade? And I always say, always as a trader, you always risk what you can afford to lose, because as Murphy's Law would have it, when I got started in trading, I had a really opposite effect. Everything I did worked. And unfortunately, that made my ego real big, and I blew out my account. And so, I see people doing that. Maybe we'll do a session on risk management down the road. But, the very first part I remember is, where am I going to find money to trade with? And so I want to talk about the top 3 ways to find money to trade with. And Chris, I'd like you to kind of expand on these. So the number one thing is, and this one's to my brother-in-law. So if you're listening, D, I'm giving you this first initial. Then you need to stop gratifying yourself. Instant gratification. Stop going to Starbucks. Stop going out and grabbing, expensive, overpriced takeout food. And it's good he's not a smoker, because that right there, a pack of cigarettes is not cheap. But you take a look, and all I did was I threw together the kind of the Starbucks smoking, eating, takeout, a cup a day, a pack a day, a meal a day. You're probably talking about $30 a day you're spending. And that adds up, believe it or not, to somewhere just south of $10,000 a year. At $10,000 a year, folks, in smoke it, eat it, drink it gratification. And so that's an easy fix. Now you're going to have to take some of that 10,000 you're saving and put it towards, brown bagging it and putting it towards the coffee pot. I don't know what you can do. Stop smoking. I don't think chewing on the gum is going to be any cheaper. But all I'm saying is, one of the first things that someone can do is cut down on instant gratification. And I just talked about a couple of easy things. There's other things out there, Chris, and I'm sure you have a comment or two on them. But what do you take? What's your take on it?
You know what? I'll give you one, and this directly plays right into your AT&T comment. AT&T has gone through the roof the last 2 days. Why? Because they've gotten a bid or two for DirecTV, so it's added to the value. They might sell DirecTV, or there are people in the market for it. I happen to have cut my subscription to DirecTV just 3 months ago, and now I'm saving about $300 a month because I don't pay for. I've got take the 50 or $60 out that I'm paying for YouTube TV now, and I'm still bagging $250. Tom,
Mm-hmm.
$250 times 12.
Yeah.
This is where it's the small things, but all you have to do is replace 1 or 2 things, like you said. Don't go out to eat 3 times a week. Go out once.
Is. Those things add up. Look at subscription accounts. There are people out there that just feel like they have to have everything. They have to have every package: HBO, Showtime, Cinemax, Movie Channel, and there are tons more epics. And then that's not enough. got to get the Disney Plus, got to get the Netflix, got to get Hulu, got to get Peacock. I mean, my God, there are dozens
Yep.
of these subscription services available out there. Pick one, pick two,
Well,
save yourself some money.
yeah.
All right.
And this was obviously this was the brainchild of all the networks or the cable companies back when we started thinking about a la carte. They got afraid and said, "Oh, well, we'll just make it." In the end, you and I end up paying almost the same amount after a year or two of cutting the cord.
So that's a savings one, Chris. I'm going to
Yep.
talk about another savings one too. And this is something that I've been doing for years upon years upon years is eliminate credit card debt and just pay the bill. If I use a card and, now I'm kind of talking off trading topics, but it comes back around to it. I use a card, and if I can't pay it off at the end of the month, I don't buy it. It's just that simple. I don't want to pay a credit card company interest. They hate me. And it's been great because my family's kind of the same way. We do it, we'll do it for the points, or we'll do it because it's the way we transact. But I don't want to pay for the privilege. I pay for the privilege of using the card by the yearly fee, and at least I take advantage of as many of those perks for the yearly fee as possible. But the last thing I want to do is add insult to injury and pay the crazy 18% credit card interest fee.
Yep.
I mean, you're
I'm
talking
right
about,
there with you.
think about this. The average person has over $10,000 of credit card debt. Now, that's come down this year. There's going to be a new number, but I mean, that number's come down significantly. But even if it's still 7, let's just throw that out there. That's still a lot of credit card debt. And, if you've got $10,000 credit card debt and all you're doing is making minimum payments, I mean, you're paying $2,000 a year in payments that barely pay down your principal. And so eliminate that debt, and you're gonna immediately recoup, that interest that would be going to somebody else.
Yep. Put it back in your pocket.
Exactly. I mean, even one thing my son does, and he's just kind of getting into it. He's a starter, but he scans all the credit card companies for the best rates. When we upgraded our iPhones, he even went as far as to say, "All right, you know what? Let's not be stupid. There's a $500 offer here, a rebate offer here. If you go through AT&T or you go through Verizon versus going and buying it right at the Apple Store. Why buy it at the store?" It's the first time I didn't buy an iPhone at the Apple Store. I went through AT&T. My family went through Verizon. So and all of it was in a midst of saving money. And people might say, "But Tom, you don't need to really worry about saving money, do you?" Listen, I don't. But if I saw $500 blowing down the street, my track shoes are on, and I'm going to go get it.
I'll fight for it myself. Hey, let me throw one out there too, a
Yeah.
different one. I downloaded this last year, had a friend that said, "Hey, try this out." It's called Dobot, Dobot, Dobot. Tom, it is, if you're trying to save money to get started investing or for a goal or something like that, this is one of those apps that maybe 2 or 3 times a week, it sends me a text message and it's got a joke in it some days, or it's got something about, hey, first snowfall. You know, why don't you throw $3 in your account? Why don't you do this? Why don't you that? And it siphons money off of, whatever account you've picked, a savings account, a checking account. And it's such small amounts you never notice. After a year and probably 3 months, got more than $2,000 in this account from
Wow.
just saying yes every time they ask me. All I do is I made a commitment to myself and said, you know what? Every time it asks me, I'm going to say yes.
Nice.
Boom.
I
There
mean,
you go.
there's so many little things that we're not aware of that could just and if you get something out for our podcast, you're able to use it, guys. Let us know. The final piece that I wanted to add to this is eBay. All right, this is not the saving part. This is the making part. Is that there is if you go to you look at data out there. There were some research reports that were done about the number of the amount of stuff that's in people's houses. I mean, the average American home, first of all, what is it? 1 in 10 have so much stuff in their house they actually buy or rent private space to store stuff they can't store in their own house. And here's the other part: 50% of the stuff that we own, and if and this is a research a number that I would say is very conservative. 50% of that excess stuff we own is never even used. I think it's closer to 90 myself. I mean, and I'm a victim of this. I mean, I'm a big. I got camera equipment, from not only from our podcasts, but from videos, from doing the YouTube videos and the channel. I have got extra. Let me tell you what I have. I have extra computers that I don't use. I have extra monitors that I don't use. I've got lighting. I got so much lighting in my studio, both in my podcasting studio and my video studio. I mean, thousands of dollars of stuff. And there's a good chance I don't use half of it. I could have gotten away with half of it. I made it more convenient for myself so I don't have to drag stuff everywhere. I've got a studio in my house up in New York. I've got, and I was thinking, wow, if I really had to boil down to it, I could really literally do this podcast off of a laptop and a phone. And I could even do a lot of what I do off of a laptop and a phone. So, where I'm going with this, folks, is this: stuff that you don't use, sell it on eBay. I mean, there is I think the average, and this is old research, but the average home has over $3,000 of stuff that they don't use, that they would not miss. And so that's an easy one, especially those of you that are younger. I mean, you might say, well, wait a second, I'm young, I don't have a lot of stuff to sell on eBay. Yeah, but I bet there's some stuff in your house that could go. I'm not telling you to steal your parents' stuff and sell it on eBay. It's not what I'm saying. Get your parents' permission first. You might say, wait a minute, I'm 25, 30 years old. I don't need my parents' permission. You do if you're going to sell their stuff. But
or if you expect an inheritance at some point.
Yeah. But I mean, it is quite amazing how much you have that you don't know, how much you can save that you don't know. It's just about, literally inventorying your liabilities, inventorying your assets that you possibly don't need, and moving forward. All right. And this goes outside of trading. It actually goes with life. I mean, to me, and I've said this a lot, money is a tool. Money is nothing but a tool. And you can do three things that I know you can do with that tool. You can spend it. You can overspend it too. And then you're the tool because the money's using you. You could save it. And if you save it, that's great. But with inflation and with the U.S. dollar, every day getting less and less valuable, really the thing you want to be doing is using that money, that tool, and investing, trading, and make that liquidation value of that tool grow in value. So, Chris, any final words?
You know what? I am looking forward to us talking next week because I want to see if one day makes a trend. In today, we're seeing a pullback by 2% in the middle of the week. And usually Wednesday is hump day. The market usually goes up. So it's going to be interesting. People have something to look forward to. I always like to give away one index or one indicator I'm watching. Today, it's the VIX, Tom. We bounced against 20 and looks like it wants to make a run to 25. Nice 5 to 10% correction would be a nice pause that refreshes. That's my closing thought.
All right. And my closing thought is that, everything that we discuss here on the podcast, and I've done them on past podcasts, we use our research. We use our seasonal research. We might use technical research. We might use fundamental research. But at the end of the day, both Chris and I are not 100% accurate. So, everything that we do here and will continue to do, use your own best judgment, guys. You do your own research, your own homework, and do what feels right for you. All right. Hey, Chris, thanks a lot. Appreciate you jumping on early with me today.
My pleasure. We'll talk next week for sure.
All right. And everyone else, have a great rest of your week. We'll see you then. Bye now.